everyone. Today's video discussion is going to be about capital gains and losses. Now, what are capital gains and losses? Well, you will incur a capital gain or a capital loss when you sell a capital asset for either more or less than the cost basis amount. And the cost basis amount is the amount that you originally paid for the asset. So if you sell a capital asset for more than the cost basis amount, you will incur a capital gain. On the other hand, if you sell a capital asset for less than the cost basis amount, you will incur a capital loss. Now, what are some things that are considered capital assets? There's collectibles, which can include precious metals, coins, stamps, antiques, things of that nature. Real estate, business stock, and business assets. Business assets including furniture, equipment, etc. Those are things that's considered capital assets. Note that depending upon the type of capital asset that you have will determine how the capital gain rate is arrived at. And I say this because some capital assets qualify for a special tax rate, and some qualify for exempt status. Note that you can only take a deduction for a capital loss if that capital asset was held for investment purposes. If that capital asset was not held for investment purposes, you cannot take a loss or deduct a loss on your tax return. Let me give you an example. Your main home, the home that you live in, you sell that home. You sell that home for less than the cost basis. You've incurred a loss, yes, but you are not able to deduct that loss on your tax return because it is considered a personal loss and not an investment loss. Now, on the other hand, if that same house was a rental property and you sold it at a loss, then you will be able to deduct a loss on your tax return. Why? Because the rental property was an investment property and it was held for investment purposes. So again, you can only deduct losses for capital assets that are held for investment purposes. Also note that currently the maximum amount of loss or losses that you can deduct per year is either $3,000 or $1,500 if married filing separately. Now, this does not mean that you cannot deduct the total loss. Say, for instance, you had a loss of $10,000 on a capital asset. Well, only $3,000 of that is deductible in the year that you had the loss. The remaining $7,000 gets carried over to future years until the loss amount has been exhausted. And yes, this means that if you continue to incur losses throughout the years, they just keep piling up and, piling on top of each other, and you can only deduct either $3,000 or $1,500 if married filing separately, and the rest of the loss gets carried over to future years until it's exhausted. I know for some that's a pain because they have major losses, and it's like, well, gee, I'm going to be 50, I'm going to be 90 before, I can recoup this or deduct all of this. Well, unfortunately, currently, that's what the IRS law is, that you can only deduct a maximum of either $3,000 or $1,500 per year in capital losses. So now let's talk about the different types of investments in regards to time. You have short-term capital investments, and then there are long-term capital investments. It is important that you know how long you've held an investment, as these two types of investments are taxed differently. Let me explain what a short-term and a long-term capital investment is. A short-term investment is an investment that you have held a year or less, 365 days or less. A long-term investment is one that you have held more than a year, 366 days or more. Now, short-term and long-term capital investments are taxed differently. So again, it is important to know the holding period for your investments when you're claiming either capital gains or capital losses. As for reporting capital gains and losses, you would use the forms 8949 and the Schedule D. Both of these forms are required when you are reporting capital gains or losses. These forms are included with your 1040. The information from these forms transfer over to the 1040. Now let me make mention of individuals who sell stock or bonds and do not report it on the Schedule D or the Form 8949. Well, likely you're going to get a letter from the IRS saying that you owe money, because the IRS sees this as a gain. Why? Because they have no idea as to what the cost basis was. So the sale of the stocks and mutual bonds, etc., gets reported to the IRS. But they do not get the cost basis amount, and therefore they have no clue whether you have a capital gain or a loss. That's why it is important that you complete the Schedule D and the Form 8949, which will show your cost basis in the asset and that will determine whether or not you have a gain or a loss. For more information regarding capital gains and losses, you can visit the IRS website at www.irs.gov, or you can Google the term and you will be presented with various links in relation to capital gains and losses. Now let me give you the capital gains rates for tax year 2012, which are a result of the fiscal cliff legislation. There's a 0% capital gains rate, 15%, and 20%. The 20% capital gains rate is applicable to individuals whose income is $400,000 or more per year. Again, the 20% capital gains rate is applicable to individuals whose income is $400,000 or more. In addition, for high wage earners, because of the fiscal cliff legislation, there is a Medicare tax, sometimes referred to as a net investment tax. And this tax is only on investment income. The Medicare tax rate, or the net investment tax rate, is 3.8%. For more information regarding the net investment tax, again, you can visit the IRS website. Now, before I conclude this video regarding capital gains and losses, I do want to mention that I have a website that may be beneficial to you as well. And my website address is www.audiotaxhelp.com. That's www.audiotaxhelp.com. In addition to owning and operating my own tax business, I am also a tax and finance expert on a reputable Q&A site. To browse answers to various tax and finance questions that I have answered for individuals, you can Google my username, tax.appeal.168. That's tax.appeal.168. And for those of you who are not familiar with my other videos, I have a tax help video series covering about 25 different tax matters. You can also Google my username, tax.appeal.168, to see those videos as well.